15 crypto day trading strategies that will make you a millionaire. Have you ever wondered why some traders make a fortune in crypto day trading while others lose money? The secret lies in the strategies they use. If you're looking to level up your crypto trading game, you're in the right place. Whether you're new to crypto or a seasoned pro, these trading strategies can help you optimize your trades and maximize your potential profits. Don't act on emotion. Watch the entire video and choose the perfect strategy for you. I should charge you thousands for this tutorial, but I'm offering it to you totally free. Just one thing I want in return. Like the video and subscribe to the channel. It's like a cup of water in exchange for a lake. Number 1. Scalping. Scalping is a fast-paced trading strategy that involves making multiple trades in a single day to capitalize on very small price movements. The goal is to accumulate modest profits through a high volume of quick trades, rather than relying on large price moves. Scalpers often focus on highly liquid cryptocurrencies, where price changes are frequent and can be quickly acted upon. This strategy is ideal for highly focused traders who thrive in high-pressure environments and can make split-second decisions. Scalping requires intense concentration, quick reflexes, and the ability to spot minute price movements. It is best suited for traders who can dedicate a significant amount of time to monitoring the market and executing trades rapidly. Scalping is also ideal for those who prefer shorter time frames and are comfortable with frequent trading, making it a great fit for day traders who enjoy the excitement of fast-paced markets. Number 2. Momentum trading. Momentum trading is all about identifying cryptocurrencies that are experiencing strong, sustained price movements in one direction, either up or down. Traders using this strategy aim to enter the market when momentum is building and ride the trend until it starts to slow down. Momentum traders often rely on technical indicators such as the RSI, Relative Strength Index, MACD, Moving Average Convergence Divergence, and volume to confirm the strength of the trend. Momentum trading is perfect for reactive and fast-thinking traders who can quickly spot emerging trends and capitalize on them before they run out of steam. It's ideal for traders who have a good understanding of market psychology and can interpret news or market events that may trigger a price surge or drop. Active day traders or those who prefer short to medium-term trades will find momentum trading especially rewarding, as it allows them to capitalize on short-term opportunities that can lead to sizable profits. Number 3. Range trading. Range trading revolves around identifying cryptocurrencies that are moving within a defined price range, bouncing between established levels of support and resistance. Traders using this strategy buy at support, the lower price point, and sell at resistance, the upper price point, profiting from the predictable price oscillations within this range. Range trading is ideal for traders who prefer stability and predictability in the market. It's best suited for those who don't want to deal with the uncertainty of volatile trends and would rather trade within a known price range. This strategy is also well suited for beginner traders or those looking for a lower risk approach to day trading, as it involves less unpredictability and requires fewer complex indicators. From fast-paced scalping to long-term position trading, there's a strategy that can work for anyone. Are you serious about taking your crypto trading to the next level? Keep watching. Number 4. Breakout trading. Breakout trading focuses on identifying price points at which a cryptocurrency breaks out of an established consolidation pattern, signaling the potential start of a strong trend. A breakout occurs when the price moves beyond key support or resistance levels, often accompanied by an increase in volume, which confirms the move's validity. This strategy is ideal for traders who enjoy chasing big price moves and are comfortable with volatility. Breakout trading works best in volatile markets, where strong price movements are expected, and traders can capitalize on the resulting trend. It's particularly effective for traders who are comfortable with risk and willing to take positions based on market momentum, rather than waiting for confirmation. Breakout traders need to be vigilant and ready to act quickly when a breakout happens, making it ideal for those who can dedicate significant time to market observation. Number 5. Reversal trading. Reversal trading involves predicting the reversal of a trend. When an asset changes direction after a prolonged move in one way, reversal traders look for signs of trend exhaustion, such as divergence in technical indicators like the RSI or MACD, and use these signals to enter trades before the trend turns. Reversal trading is best suited for experienced traders who can read market sentiment and identify when a trend is likely to reverse. It's ideal for those who are comfortable with a higher degree of risk, as predicting reversals can be more difficult than following trends. Traders with a strong technical analysis background will excel with this strategy, especially those who can spot subtle signs of market exhaustion and use that to time their entries and exits accurately. Number 6. Trend following. Trend following is one of the most popular strategies among crypto day traders, and for good reason. It involves identifying an established trend, either up or down, and entering the market in the direction of that trend. The goal is to ride the trend as long as possible, exiting when signs of a reversal appear. Trend followers often use tools like moving averages, the average directional index, ADX, or trend lines to confirm the market direction. This strategy is most effective when the market shows a strong, clear trend, making it easier to predict price movements. This strategy is ideal for methodical traders who prefer structured, less volatile trading environments. Trend following suits traders who want to take advantage of longer-term price moves without the stress of constant market monitoring. It's particularly effective for patient day traders or swing traders who are not looking for quick profits but want to ride out strong, well-established trends. Number 7. News trading. News trading involves reacting to breaking news that can move the crypto market. Whether it's a government announcement, earnings report, or significant market news like regulatory changes, news traders aim to capitalize on the volatility that follows. By staying updated on global events, traders can act fast to make profitable trades. The key to news trading is being able to react quickly to significant news and understanding how that news will impact the crypto market. The price movements triggered by such events can be sharp and fast, so timing is critical. This strategy is best suited for fast-moving traders who can handle high-pressure situations and make decisions quickly. News trading requires the ability to stay on top of global events and interpret their potential market impact. Traders with strong market intuition and an understanding of how news can affect crypto assets will thrive with this strategy. Number 8. Pair trading. Pair trading involves taking opposite positions in two related cryptocurrencies, buying one while shorting the other. This strategy profits from the relative performance of the two assets, rather than relying on the overall direction of the market. Traders using this strategy look for pairs that have historically moved in correlation and expect the trend between the two to continue. Pair trading is best suited for market-neutral traders who prefer to avoid the overall volatility of the crypto market. It's ideal for advanced traders who have a strong grasp of market correlations and can identify pairs that are likely to perform differently based on technical or fundamental factors. Number 9. Algorithmic trading. Algorithmic trading leverages computer algorithms to automatically execute trades based on predefined criteria. These algorithms can analyze market data, identify patterns, and place orders faster than any human trader could. Algorithmic traders often develop custom scripts that use a variety of factors, such as technical indicators or market conditions, to make trading decisions. Algorithmic trading is best for tech-savvy traders with programming skills who want to automate their trading strategies. It suits those who are not only experienced in trading, but also have the ability to code and design algorithms. This strategy is particularly effective for high-frequency traders who need to execute thousands of trades in a short amount of time, making it ideal for those who want to remove human emotions from trading decisions. Number 10. High-frequency trading. HFT. High-frequency trading, HFT, is a strategy that involves executing large volumes of orders in fractions of a second. This strategy relies on sophisticated algorithms and powerful computing systems to exploit small price inefficiencies in the market. HFT traders aim to make profits from price discrepancies that only last for a very short period. Given the speed and volume of trades, HFT is a highly competitive strategy, often requiring substantial capital, infrastructure, and technology. HFT is ideal for professional traders with access to advanced technology and the ability to manage the associated risks. It's best suited for institutional traders or those with significant resources, as high-frequency trading often requires sophisticated hardware and low-latency networks to execute orders in milliseconds. Number 11. Swing trading. Swing trading involves taking advantage of price swings in the market, where traders aim to enter positions during a trend's temporary retracement, pullback, and exit when the price reaches a new peak or valley. Unlike day trading, which focuses on capturing short-term price movements, swing trading typically holds positions for several days to weeks. Swing trading is ideal for intermediate to experienced traders who prefer a more balanced approach between long-term investing and short-term trading. It works well for those who don't have the time or inclination to monitor the market constantly, but are still looking for profitable opportunities in medium-term price moves. Number 12. Position trading. Position trading is a longer-term strategy where traders hold positions for weeks, months, or even years, aiming to profit from the overall trend of an asset. Position traders use fundamental analysis to assess the underlying strength of the cryptocurrency and make investment decisions based on long-term trends rather than short-term price movements. Position trading is ideal for long-term investors or those who are looking to profit from the overall growth of a cryptocurrency over time. It is best suited for patient traders who don't mind holding positions through short-term volatility. Position trading also works well for traders with a strong understanding of market fundamentals, as it involves evaluating long-term potential rather than short-term market noise. Number 13. Copy trading. Copy trading involves automatically copying the trades of successful traders, allowing beginners or less experienced traders to benefit from the expertise of others. Platforms offering copy trading allow users to select a trader with a proven track record and then replicate their trades in real time. Copy trading is perfect for beginner traders or those with limited experience who want to participate in the market but don't know where to start. It is ideal for investors who prefer passive strategies and are willing to rely on the expertise of others to guide their decisions. Number 14. Arbitrage trading. Arbitrage trading takes advantage of price discrepancies between different exchanges or markets. This strategy involves buying a cryptocurrency at a lower price on one exchange and selling it at a higher price on another, profiting from the difference in price. Arbitrage opportunities can arise due to inefficiencies between markets, and traders must act quickly to capitalize on them. Arbitrage trading is best suited for fast-moving traders with a keen eye for spotting price discrepancies. It is ideal for technically advanced traders who can program bots or use sophisticated tools to quickly execute trades across multiple platforms. Arbitrage trading requires quick execution and substantial capital, making it a strategy more suitable for institutional traders or those with the resources to manage multiple accounts and handle large volumes of trades. Number 15. Fundamental analysis. FA trading. Fundamental analysis trading focuses on evaluating the intrinsic value of a cryptocurrency based on factors such as technology, the team behind the project, use case, adoption, and market sentiment. Traders using FA seek to invest in cryptocurrencies that they believe are undervalued or have the potential for long-term growth. This strategy involves in-depth research into the fundamentals of a project, its potential to scale, and how it fits into the broader market landscape. FA trading is ideal for long-term investors who prefer to base their trading decisions on research and market fundamentals rather than short-term price movements. It is best suited for analytical thinkers who enjoy studying the broader picture of a cryptocurrency's development and can identify projects with high growth potential. If you're ready to start implementing these strategies, be sure to subscribe to stay updated with our latest videos on crypto trading. Share your favorite strategy in the comments below and join our community of traders who are leveling up their game.